Hi everybody, this is Martin Mesa. Welcome back to Mortgage Mind. Today we are going to talk about paying loan points when getting a mortgage loan. And going to ask the question, what's the point? Okay, first of all, what is a point when you're talking about paying a point on a mortgage loan you get? Paying a point, or a point, is basically an additional charge the lender charges you, the borrower, the applicant for the loan, in order to get a lower interest rate on the loan you're applying for. And 1 point is equal to 1% of the loan amount you're applying for. So in other words, if you're applying for a $200,000 loan, 1 point would equal $2,000, or 1% of $200,000. And you can pay a point or a fraction of a point or multiple points depending on your scenario and how much you want that interest rate to go down in exchange for paying that point or those points or fractions of a point. Under normal circumstances, prior to all this coronavirus thing that started affecting the mortgage market the way it has, normally I would not almost always advise people to pay points. I would hardly ever advise them to pay points because in general, usually paying 1 point would only lower the interest rate maybe 0.25%. So if the rate with no points was 3.75, paying the 1 point might lower it to 3.5, right? 0.25%. And under most scenarios, it felt to me that it wasn't worth paying the point. So I would almost always advise against it. Now that we're in coronavirus times, it almost always makes sense to at least consider seriously paying a point, because nowadays what we're finding, and not in all cases, but in many cases we're finding that paying that 1 point might lower the interest rate by a lot more than 1/4 point. In some cases you'll see the rate go down by 1/2 point or even more if you pay the 1 point. So in other words, if your rate that you're being offered is, let's say, 4% with no points, paying the 1 point might lower that from a 4% to maybe 3.5, or maybe even lower than 3.5, which is 1/2 point or more reduction on the interest rate of your loan. So in those situations, it many oftentimes actually does make sense to pay that point or maybe a fraction of or points. Lenders right now are incentivizing borrowers to pay points by offering them a much lower interest rate if they do on the loan that they're applying for. Why are they doing that? Because they want, first of all, they're losing or going to be losing a lot of money on all the forbearance activity that's going to be happening. All these people that are going to stop making their mortgage payments because of a loss of income, reduction of income, unemployment due to the coronavirus. And so they're already going to be losing all that money. They generally lose money when you do a loan and turn around and refinance and pay them off in 3 to 6 months, which was happening a lot before the coronavirus. So they were already losing money on that. But now to mitigate that kind of loss, because they're already going to experience a lot of losses on the servicing side with all the forbearances I just talked about, they are making it harder for you to turn around and refinance in 3 or 6 months, because if you pay a point or two to get the lower rate now, you're much less likely to turn around and refinance in 3 or 6 months, because you usually want to keep that loan for enough time to recoup the cost of the point that you had to pay to get the loan. There's usually a break-even point. So if you pay a point, you're going to get a lower rate, higher monthly savings, but it takes a while to recoup that point you paid or points you paid in the form of monthly savings. And so you're generally more likely to stick with that loan until you recoup that initial investment. Therefore, most people that would normally refi in 3 to 6 months won't, because they paid the point, they've got skin in the game, they want to at least recoup that point before they consider refinancing again or paying that loan off in any way, which will give the lender higher probability that that loan won't get paid off for a while. So hopefully that helps you understand why the environment we're in as far as lending goes is encouraging borrowers to pay points. Anyway, going back to why I think it's important to consider paying points, because it'll give you a much lower interest rate than the normal point would give you. So when you're out there applying for a refi, or if you're already in the process and your loan officer hasn't given you the option of paying a point or two to see what that lower rate might be, please ask about it and look at that, because it may be worth your while to do so in the long run. Yeah, nobody likes to pay points. Nobody likes to pay more money than what they might have to pay to get a loan. But if it's going to lower your interest rate 1/2 point or more, it might be worth it. So take a look at it, consider it. it may benefit you in the long run. So that's my tip for today regarding paying points. I hope it helps. If you have any questions about this, feel free to give us a call and speak to a loan officer like myself or anybody else. And that's it. Hope you're well, stay safe, and we'll see you on the other side.